नरघट तक है तेरी कहानी, पग पग प्यारे। दंगल 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 दंगल, सूरज तेरा चढ़ता ढलता गर्दिश में करते हैं तारे। दंगल 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 दंगल।
Great morning, my dear friends. Bhupesh Anand this side. Lecture number 3 I'm going to start with. We have already covered two lectures. Lecture number 1 and lecture number 2. We are doing study session number 11, reading number 37, and the topic is leverages. There are 5 outcomes. I have covered A and I am discussing B. In lecture 1, I have covered A, and lecture 2, I will be covering with learning outcome B, and again in lecture number 3, I will be discussing with the same learning outcome B, that what is and how to calculate leverages and what is the interpretation of leverages. Mind you, this learning outcome number B is the most important learning outcome. So I have today also prepared so many handwritten slides for you, and I will be discussing the formulas with the help of case studies, and there is no need to even crack those formulas. If you know the logic, if you know the concept, you can easily grab the things that why there is so much change in sales and there is a higher or lesser percentage change in EBIT, or percentage change in EBIT. There is a disproportionate change in sales and EBIT and EBT. So today's lecture will be the concluding lecture for learning outcome number B. Please take out your registers because we have to write on the case studies. If you will write on those case studies, then there is no need to learn that formula. So today will be lecture number 3. I will be covering with our learning outcome number B, lecture 3. And firstly, before starting with the new concept in learning outcome B, because I have to cover what is the meaning of total leverage. I have covered operating leverage, I have covered financial leverage in the last class, but today I will be telling you what is the meaning of combined leverage or what is the meaning of total leverage. But before telling that, I want to revise lecture number 2. I think I have prepared an income statement for you, and in that income statement, I have shown that this is sales, this is variable cost, this is contribution, this is operating fixed cost, this is EBIT, this is operating profits, this is interest, this is financial fixed cost, this is EBT, this is tax, this is EAT. All that calculation I have given. So again, I have prepared an income statement for you. So please prepare that income statement. Let the figure be anything. Sales, variable cost. The balancing figure will be, if we subtract variable cost from sales, the balancing figure will be contribution. It means the profit which is contributing to net profit. It means the profit which is contributing to fixed cost, to incur fixed cost. And if contribution is more than fixed cost, the balancing figure will be profit. And if that figure will be operating profit, and then we will subtract fixed financial cost, and then EBT, and then tax, and then EAT. So I have, for the conceptual sake, I have assumed degree of operating leverage as 2 and degree of financial leverage as 3. Now what is the meaning of 2? We are already aware of that it is sales upon EBIT. If I want to calculate this way, or if I want to calculate in this way, percentage change in EBIT upon percentage change in sales. I think you must be recollecting that. And in case I want to calculate degree of financial leverage, so degree of financial leverage will be EBIT upon EBT, or percentage change in EAT upon percentage change in EBIT. So you must be wondering that sometimes I use the word EBT and sometimes I use EAT. My dear friends, I will tell you in today's lecture that percentage change in EBT is always equal to percentage change in EAT, and even that is equal to percentage change in EPS. So we will do it with the help of case study. We will understand the concept, we will not cram, And similarly, percentage change in sales is equal to percentage change in contribution, that I will be covering at the later part of this lecture. Firstly, please prepare this income statement. Sales, variable cost, contribution, operating fixed cost, EBIT, interest, EBT, tax, EAT, degree of financial leverage, let it be 3 and let it be 2. So I have given you the interpretation of DOL. Because firstly there will be a change in independent factor. If 1% change in sales is there, EBIT will change by 2%. If 10% change in sales is there, EBIT will change by 20%. Now change means increase or decrease both. That's why I'm using the word change. It is not just increase or it is not just decrease. It can be anything, increase or it can be decrease, and consequently the dependent factor will change. Either it will increase or either it will decrease. So please write down DOL. I know that you know, but I know that you don't know how to see the interpretation of DOL, because there are two factors, independent and dependent. The crux of today's lecture will be, I want to prove something, that how we can calculate degree of total leverage with the help of these two leverages. So I think you must have written this. So again, I am moving to next slide. Degree of financial leverage. It means if there is a 1% change in EBIT, because EBIT is independent factor. Firstly, there will be a change in EBIT, and then there will be a change in EAT. That is EAT. This relationship between EBIT and EAT, that disproportionate change in EBIT and EAT, that disproportionate change is named as degree of financial leverage. So please write down. Supposingly financial leverage in my example I have taken as 3. So if EBIT increases by 10% or decreases by 10%, my EAT will increase by 30% or will decrease by 30%, because there is a fixed element of cost which is sitting in between EBIT and EAT, that is interest. So because of that fixed financial cost that has to be incurred in any case, whether I am incurring profit or not, whether my EBIT is increasing or not, whether my EBIT is decreasing or not, it hardly matters, but we have to pay fixed financial cost, that is interest. So it is due to that there is a disproportionate change. Now I am coming to the most important point of today's learning, today's lecture. No doubt it is covered in learning outcome number B, but in lecture number 2 I have not covered this, so I am going to start with this. I have already revised lecture number 2, that what is DOL, what is DFL, what is the relationship, what is operating fixed cost, what is financial fixed cost. Now what I mean by degree of total leverage or degree of combined leverage, it is a disproportionate change in sales and EAT. For example, in my case study, I have taken that DOLB 2 and DFLB 3. It means if sales increases by 10%, then EBIT will increase by 20%. And if EBIT will increase by 20%, EAT will increase by 60%, because I have taken DOL as 2 and DFL as 3. You're getting my point? So it means if sales increases by 10%, my EAT will increase by 60%. So such a huge change. 10%, 60%. 10%, 60%. If I only see sales and if I only see EAT, then 10% change in sales will be 60%, will consequently push 60% change in EAT. So this disproportionate change is due to two reasons. One is due to fixed operating cost, and second is due to fixed financial cost. So there are two reasons for the same. One is fixed operating cost and second is fixed financial cost. So we have to incur fixed operating cost as well as fixed financial cost. So that impact is generally being seen by degree of total leverage. It can also be named as combined leverage. Combined leverage is operating leverage into financial leverage. Please write down this slide. This is the most important slide for degree of total leverage. If sales increases by 10, then EBIT will increase by 20, then EAT will increase or decrease by 60. Now this proportionate change in sales and EAT, this is calculated with the help of combined leverage or total leverage, and it can be calculated by 3 methods. The first method I have just written, degree of total leverage is 6. That is degree of operating leverage into degree DFL, DOL into DFL, DOL into DFL, DOL into DFL. That is DTL. Degree of total leverage is DOL, degree of operating leverage into degree of financial leverage. And we have two methods, as we have seen in case of operating leverage as well as we have seen in DFL, that there are two methods. One is absolute and second is relative. That is contribution, that is sales upon EBIT. That is absolute, and percentage change in EBIT upon percentage change in sales for this operating leverage. And for financial leverage we did EBIT upon EAT, EBIT upon EBT, and second is percentage change in EAT upon percentage change in EBIT. Now you must be wondering that sometimes I use EBT and sometimes I use EAT. I will tell you why. Because the percentage change will be same, and sometimes I use sales and sometimes I use contribution. That is one of the same thing. No problem, no hitch. Firstly, just write down this. I will prove that why you can interchange as per the given question. Percent instead of percentage of sales, you can write down percentage of contribution. And instead of percentage change in EBT, you can use percentage change in EAT, or you can use percentage change in EPS. As the case may be, firstly write down first formula, degree of total leverage is equal to contribution upon EBT. Method 2, degree of total leverage is equal to percentage change in EAT upon percentage change in sales or percentage change in contribution. Okay, so now my concept now will be to prove that how we can interchangeably use sales and contribution, and how we can interchangeably use EBT and EAT or EPS. So please, for that, you have to write down this case study again. I know that you will write down. I know that you know the cost of 6 months. Even 1 mark can help you in clearing CFA level 1. So please write down this: sales, variable cost, contribution, operating fixed cost, EBIT, interest, EBT, tax, EAT. Again, the same case study. Operating leverage as 2, financial leverage as 3. It means total leverage as 6. And I have written the formulas. That how these formulas have been derived. I have given you the logic also in the last class. Now why I can use percentage change in sales instead of contribution, or I can use contribution instead of sales. So that for that proving that, I have taken a case study. I will be happy. I will feel happy. I will feel happy if you write down these things. Please sit straight and please write down. Because please take out your calculators. This is my calculator, BA Paul, check in Texas. Please take out your calculators. I have assumed that I have given the one statement that percentage change in sales is equal to percentage change in contribution. Sales percentage change is equal to contribution percentage change. It means we can interchangeably use this. So below is the figures. So with the help of which I prove that how we can use this. Let the sales be 100. And we know that variable cost in lecture number 2, it is a function of sales. Variable cost ratio is variable cost upon sales into 100. The cost which relates with production, the cost which varies along with production, that is variable cost. Supposing the variable cost is 40% in this case. So sales is 100, variable cost is 40, contribution is 60. Supposingly I have taken an example number B. This is the base example. I will say example number 1 is base. It is base example. Now I will compare base with change. Example B. Suppose sales are increased by 50%, then my sales will be 150. Then my variable cost will be 40% of 150, that is 60. And my contribution will be 9090. You're getting my point? Similarly, in example number C, supposingly the sales is 200. It means if I have increased sales by 100%, then 100 plus 100% of 100, that comes to 200. Now variable cost is a function of sales, so variable cost will be 80. So contribution will be 120. Now see, when there is an increase in sales by 50%, then we will see that how much increase in there in the contribution from 60 to 90. Now, you know that how to calculate change. New minus old upon old. That is 90 minus 60 upon 60 into 100, that comes to 50%. So like this we have calculated 50%. There is a 50% change in contribution. If there is a 50% change in sales, it means percentage of change in sales is equal to percentage change in contribution. Similarly, if I compare example A with example number C, I will get the same result, that percentage change in sales is equal to percentage change in contribution. 100% change in sales, it will be same as 100% change in contribution. So my dear friends, I have proved that instead of sales I can use contribution. Answer will remain same. Now, the next point which I want to tell you with the help of new case study, that how I can say the percentage change in EBT is equal to percentage change in EAT. So I can use the interchangeable words, that is no problem for that. For again, I have used the example. Suppose A, example A is the base example. Suppose example A is the base example and EBT, I have taken EBT as 100. And if there is an increase by 50%, then it will be 150 in example B. And if it is increased by 100%, then it is 200 in example number C. And suppose tax rate is 30%. So 30, 30, 45, 60. EAT, earning after tax is CA 70, 105 and 140. My dear friends, with the help of calculator, please tell me how much is change percentage. 105, 105, 105 minus 70 upon 70 into 100 is equal to 35 upon 70 into 100 is equal to 50%. It means a percentage change in EBT is equal to percentage change in EAT, one of the same thing. Similarly, example number A and C, the percentage change in EBT is equal to percentage change in EAT. So it means we can easily use, instead of EBT, we can use EAT. Now the last concept which I want to tell you, that there is the equation of percentage change in, say, a percentage change in EBT is equal to percentage change in EAT is equal to percentage change in EPS. Because we know, because all have the same percentage. Now I want to prove that why we can also use percentage change in EPS with the help of a case study. Please note down, my dear friends, case study. Again, a third case study, how percentage change in EAT is equal to percentage change in EPS. And we know that EPS is equal to, we all know that there are two types of EPS, basic EPS and diluted EPS. We know that EAT, profit after tax, net income, net profit upon number of equity shares. This is EPS. Like this we can calculate EPS. So I have again taken the example to prove that how percentage change in EAT is equal to percentage change in EPS. Supposingly EAT is 70, and if there is increase of 50%, 50%, then 105, then 140. Now number of shares be 100, 100, 100. EPS is 0.7, 10.5 and 14. Now find out the difference. 10.5 is the EPS in example number B, and in example number A, EPS is 0.7. So difference is 10.5 minus 10.5 minus 0.7. 10.5 minus 0.7. This is not 0.7. I will say this is 7. This is 7. So difference between 10.5 and 7 is, that is 3.5. 10.5 minus 7 is equal to 3.5. 3.5 upon 7, that comes to 50%. So again, for 14 we can calculate that is 100%. So I can say that percentage change in EAT is also equal to percentage change in EPS. So in examination, if you are given with percentage change in EPS and percentage change in EBIT, you can easily calculate financial leverage, my dear friend. Please note on this. And I have proved with the help of a case study that how, again a new case study, even if EBIT increases, then also it will have the same impact in EPS, EAT and EBT. That I have proved here. Supposedly the case study be existing EBIT be 6 lakhs, existing EPS be $12 and existing interest be 4 lakhs. And supposedly there is an increase in EBIT by 20%. Now we will see whether the impact in increase in percentage in EPS is same or not. So we can compute new EPS. EBIT is 6 lakhs, interest is 4 lakhs, EBT is 2 lakhs. DFL, degree of financial leverage, is 6 lakhs upon 2, that comes to 3. It means we can calculate, directly also, because we know that there is a 3. It means that if there is a 1% change in, if there is a 1% change in sales, then there will be 3% change in EBT. And percentage change in EBT is equal to percentage change in EAT is equal to percentage change in EPS. It means if EBIT increases by 20%, then if EBIT increases by 20%, then EBS will change by 60%, because there is a degree of financial leverage as 3. Now 60% minus 60%, so 12 is the original EPS. So 12 plus 60% of 12, that is 7.2. The total is 19 rupees 20 paisa. Now it means we can directly say that EPS will be 19 rupees 20 paisa if I am aware of degree of financial leverage and original EPS. Now you must be wondering that whether in reality it will be coming as 19.2. So I have proved that also, that how in reality also it can come as 19.2. Hence the result will remain same. Cross checking not for examination but still for understanding your concept. Supposingly EBIT is 6 lakhs. And if it is increased by 20%, then it will be 7,20,000. Interest will remain same. EBT 2,320,000. Let the tax rate be 30% and let the number of shares be 11,667. I have taken 11,667 because if I divide 1,40,000 with 11,667, then my EPS will be 12 because I have assumed 12 as EPS. So with the help of 11,667, I can substantiate my case study. So if I say 1,40,000 upon 11,667, that comes to 12. And again, in the new case where EBIT is increased by 20%, just see 2,24,000 is EAT, and if I divide it by 11,667, my EPS will be 19 rupees 20 paisa. The same which I have calculated earlier, that is 12 into 12 60%, there will be a change. So 12 plus 60% of 12, that comes to 7.2. Total is 19.2. So we have calculated 19.2, my dear friends. So like this we have proved that percentage change in EBT is equal to percentage change in EAT is equal to percentage change in EPS. So I just want to summarize all the things which I have just told you. I want to say you that degree of operating leverage, degree of financial leverage, degree of total leverage can be calculated with the help of percentage change in EBIT upon percentage change in sales or percentage change in contribution. Now we have seen that either we can use sales or we can use contribution. Similarly, for degree of financial leverage, percentage change in EBT or EAT or EPS. Now we have seen that the percentage change is same in all the cases upon percentage change in EBIT. Now we can cross this EBIT and EBIT, so we can calculate degree of total leverage. The formula will be percentage change in EBT or EAT or EPS upon percentage change in sales. So this is a net formula which I have told you. Now it depends upon the question that whether you want to use EPS or whether you want to use EAT or whether you want to use EBT. But the answer will remain same. So my dear friends, I have covered learning outcome number B. I have covered learning outcome B along with the revision in this learning outcome B lecture 3. We will meet again in lecture number 4. Be happy, be jolly, be chill.